Good evening, everyone. It's Chris from Axel as well as Solstice. You can find us on X, Instagram, Discord, as well as YouTube channel. The weekly video is for free for everyone. You can subscribe, smash the like button, let us know what you think, give us your commentary, and share with your friends. Remember, we're not a broker dealer. Past performance doesn't give us any indication future results. Use at your own risk. Let's go to the first slide. And what I want to do, wish everybody a very Merry Christmas and Happy New Year. Enjoy the holidays with family, friends, loved ones from all of us once again at Solstice and Axel. Second slide, what I did, I put the S&P Fortune 500 E-mini Micro instead of using the E-mini. And what I did, I marked the November highs to the November lows on the S&P, as well as the October lows and October highs for 2025 in relationship to the December lows and the breakout. We created a brand new annual high for 2025 on Friday. Remember, we have touched the 180%. That 180% is coming from March 23rd of 2020 till the December highs of 2023, and this is 180%. We just sat right above it. If there's going to be continuation, we are paying attention to the 7,021 and 7,028. If we do end up not touching the 7,000 on the monthly, which is 123%, because we may look up and fail. And if we end up failing, we are away from the 18 SMA on the daily chart and the uptrend breakdown of that lower highs that we were creating. We created a higher high here and a higher high from the bottom and a lower high. That was the lows. That was a higher low from the bottom. So we continued higher, but pay attention on light volume, usually what we call light volume kill fuzzy, as well as, the option and the exchange expiration that is in red. That's the monthly expiration on monthly basis on the S&P 500. And you can see the annual charts where it becomes 2026. So we have a couple more days left before we end up, if there's going to be continuation or not. Let's go to the next slide. And what I did, I put here the VIX on a weekly chart, and I showed the 2-year VIX from the 2024. Every time we had a spike up, we had a reset in the market. And you can see in December when we had the spike up on the VIX, we had that little correction. We had one in April as well. You can see March and April. We fell back down. We have not been able to take the 25 area range to the 28. Every time we went up there, we fell back down. I am paying attention to that downtrend channel and the backside of this consolidation up here on the 2-year charts. In case we end up reversing back, it's good to buy usually insurance at lower cost to hedge your positions for the long term in case there's going to be volatility in beginning of January. So pay attention to that. Last but not least, remember to check us out at solstice.axel.com. And let's go to the first slide that we have up here. Remember to check us out. And let's go to the S&P 500. Before the S&P, what I did after we finished the S&P, I put the New York Composite here, and I'll show you the S&P as well. I put the last 4 months since the October 1st of 2025 till the December high here. We can see that this move up, there was continuation to the upside, and we can go to the style if we want to check the volume in the setting. So that way I want to go to equities, and you can highlight the volume, and you can highlight the option, and you can highlight the future for the volume in the extended hours on the charts. That way you are aware of it. So this is the New York Composite, and you can see that prior highs in 10.6, and here it happened on 10.27. That was the November high, the low, the rally back up, and the December reset in the lows to the high that we created this month. So this area of consolidation, I just zoomed in by accident. This area of consolidation up here is very important. We are away from the 18 simple moving average. I want you to consider whenever you look at the candle at the high and you look at the 18, the 100 SMA, the 116, and the 200, pay attention to these levels. Usually on resets, you come back and retest them when we are far away from that average. So let's take a look at now the XLK, the technology sector. And what I wanted to show you this is a little bit sector rotation between the tech sector, the AI sector, as well as the S&P. What I wanted to do is show you here that when we created a high on 1029, this was the November high on the 3rd, this is the low, and this was the basically December 10th high and the December 12th, 17 low, and we're trying to come back, and we are in a symmetrical triangle. I am paying attention to the 18 simple moving average. If we come back to it or we end up breaking above that area, and I will take this distance here to this distance up here, I duplicate it to the top. If we fall back in, I duplicate to the bottom. So either way, we trade what we see, not what we think. Let's go in here, and what I wanted to do show you here from XLK, the semiconductor SMH or SOX. It's a similar situation. You can see in the semiconductor or SOXX, they are very similar to each other. You can see that when we created higher highs here and we're creating higher lows from here, we are continuing, but this low is a little bit below this one. And you can see we are away from the 116. I do not have the 50 simple moving average. I'm just using the 18 SMA and the 116. I can add the 50 in there for everyone. Usually it's hugging up the candles up here and it's below. So there's going to, if there's going to be continuation or not. So that's on the semiconductor sector. Let's go take a look at now the E-mini, and what I want to do is break it down, the micro ES, and break it down a little bit more in detail, looking at the Fibonacci and the levels on the charts using a measured move for the following week, because we had a short week. Remember, Thursday was Christmas, so we had the Friday, we had the Wednesday half a day, and Thursday was off. So we had that Monday, Tuesday, Thursday, and basically Friday. This was the 5-day range. So what I'm going to do, go in the style, in the setting, in the intraday, go to intraday here, and we can go here 15 days so everyone can see it, and we can do 4-hour on the charts to show the levels. And the reason why I wanted to show this, I wanted to show the Sunday lows to the Thursday's high, and we can see on Friday we kind of a little bit, this is the measured move. If I take this high here to this low here, this is my measurement coming across, and I can edit the property, extend it to the left. I'm going to go till 10-1 so everyone can see it, 0-1, and I'm going to change the color to cyan or cyan color. You can see where that consolidation, that double top, we fell down, we rallied back up away, when we crossed the 18 SMA, we rallied up, we held the area, and here if we consider this is a double top, if there's not going to be continuation and 18 does not hold it, I look between, the high here between the 18 and 116, there's a 100 SMA right here, and between the 50 and the 50 SMA and the 18, there's a 32 SMA as well. So in between the 116 and the 50, there's an 83. So coming back down to this range where the 50 is, if the 18 does not hold, I'll pay attention to the 50% or eventually the 23% in this range, in case there's going to be support for continuation. And if I end up breaking the prior highs from the overnight on Thursday to Friday, and we continue higher, I'm looking for the 7,023, 7,000 and 27 to 30 area, because it will push up towards the backside of this channel. Because if I connect these points, if I use a linear regression uptrend channel hand drawn instead of the order machine doing it, and I can show you where that consolidation can be to the upside. So we can go a little higher, and if I take this bottom here to this recent low here, you can see that the machine grabbed it. But if I grab this one or up here, I am in that linear regression uptrend channel. This is why I wanted to show it hand drawn. And every time we are away from either side of the charts, you can see the S&P 500 where it is. Mike and Q. And I'm going to go back here in the hours just to show you the simplicity. On the daily, we can go custom. We can go to 9 instead of the annual chart, and we can go to the daily. I wanted just to bring it in a little bit more. This is the volume profile, value high, point of control, value area low. And these are VPOCs that on the daily charts we have not touched. When we are pushing higher, I don't usually mark them. The machine usually takes the high from here to the slow. If I'm using a little longer time frame, we can see we were creating lower highs. You can see high, lower high, lower low high from this one, and we eventually broke out. When we broke out, we created from here to here higher high on B. Then we fell back down. We created from the lows, we created a higher low, and we pushed up. And now you're creating from the A to the B to the C higher highs. If you connect those dots, here are on our pivot point, we created a higher high, but we have not been able to take out the 1030 highs for the year on the NASDAQ 100. So if I'm going to go in the style here, I'm going to show you the volume profile. We can click here on the style. What happened here? Style. We're going to load actually the volume profile, which is called market profile or monkey bars. And the reason why I wanted to show this was the monkey bars to show you where the value high is, where the value low is, and the time spent and the point of control are right at that consolidation. When we consolidated, looked down, lifted up, came back in, consolidated here, broke up, came back to this area and pushed higher. This area is considered support. If we stay above the value area high for continuation, that would be great. This is the 18 SMA if there's going to be continuation. If I end up falling back towards the value area high on the profile, because remember this profile is for 3 months. This is the profile for the November, the highs, the point of control, and the value low. Usually I mark them. This is for the 3-month range that we have from 9/1 till December 27. So there's a couple more days here to finish the year. So that will create that volume profile a little bit differently. And if we look at it on daily basis, so I can go in the style here, go back to load, and go back in the style, and we can go clean charts with no moving averages. If I put that, at least you can see where there is a breakout and breakdown. This is what they call a power bar coming down. When we retested this area, you can see we filled the gap, then rallied up. Then when we fell down, we had that big power bar and a quick reversal. And this is the second candle that looked up, didn't clear the top, but looked above the open of it. Then the following candle here pushed down and rallied higher. So you had an opportunity to go up on this straight, on this move, and come back down on this power bar to the backside of this channel and the VPOC, which was created here, which was never tested and rallied back up in continuation on light volume. You can see here that the volume dried up because this was the Wednesday half a day, this was the Friday session. The volume was light, and you can see the volume is actually up in this area. When I put my candle on the candle, you can see the volume up on that corner right here. It shows you that this is the volume on Friday, this is the volume from Wednesday, this is the volume from Tuesday, and you can see the volume from Monday was barely a million, because when we were coming down we were getting more volume, but light volume usually kills Vazi because this is the Christmas holiday rally on the NASDAQ 100. So I can go in the time frame here, I can go to a 30-day 6-hour. What I wanted to show you is these highs coming back down. We break out of that move up. This is a power bar, consolidate, come retest and grind back up. But the NASDAQ has more consolidation from here to here on that weekly bar from the prior week, because this was the Thanksgiving holiday. You can see that was that, and that was the Christmas holiday. So we had some kind of long, but there was a lot of consolidation here in the profile. Usually when you consolidate, you get a plus push up. If it pushes above, that's a +1. You look for the extension to the upside. If it pushes below, then you look for the extensions to the downside. And usually those moves are very reliable for moves up or moves down. And you can see where the midpoint of this consolidation is from this area to this area. Even coming back to here and bouncing up would be great. And if there's going to be continuation, that is okay as well. So let's go. Last but not least, let's take a look at micro BT. And what I wanted to show you here on the Bitcoin, every time we tried to rally above that 93,000 area here, we fell back down and tried to get to the 90,500, 90,600. And here we couldn't make it on Friday session. We stayed inside, but we are creating higher highs. But if this is this is the shoulder, this is the head, this is the shoulder, and we end up falling, I'll take the distance from here to here or from here to here and duplicate it to the bottom. And if there's going to be a reversal back up, I'll take the same distance here and I duplicate it to the top in order to clear this area here. And eventually Bitcoin will be back to the races, to the upside. It's going to depend what the RSI offers you on the charts on Bitcoin. If I look at it on the daily, we're going to go to a daily chart 1 year. And the reason why I wanted to show this on the charts on Bitcoin, you can see that triple top here. That was a power bar, engulfing, fell further down, rallied up. Then you had another power bar and you fell back down, retested that breakout. The breakdown here, couldn't make it, fell back in, consolidated, tried to go up and falling down. This is a lot of consolidation in this area. If I do zoom in this area, on this area here, and I take this area, if we end up holding it, we're clearing that 92,000, 93,000 off to the races back to the upside. And if I end up losing that 84,000 area, 80,000, and I fall through it, then back to the 75. And you can see on the charts on the daily what I did. So what I'm going to do, go 2 years, go daily, and I just want to compress it to show you how it would look like. You can see that move up. I have this marker here where there was a lot of consolidation. Eventually we broke up, retested it, bounced up, created that triple top. If I end up falling down to this area, that would be great. That's an opportunity to purchase more Bitcoin. But if it doesn't and it falls through, then you look for the bottom side of that consolidation where it created. But if this reverses and clears this consolidation up in this area, then back to the opposite side. So what you can do is duplicate this chart just to show you how to look at it. This was where the consolidation happened. So if you end up clearing this area, then we go to the upside. Then we can duplicate this one more time, and you can look where the consolidation happened before, where the breakdown was. You can see it, and now it's retest and falling back in. So I trade on the charts on momentum, supply and breakout and breakdowns, and using a 18 simple moving average or 20 SMA away from the 116 simple moving average or the 200 on the upside or downside. Think of it as you have expansion of fast moving averages, the 20, the, let's say, the 100 and the 200. If it's you open your fingers and you separate them, this, the candle, the power bar here, I'll show you how it looks like, so that way you can understand what I'm trying to do. To give you a better example here, we're going to use the moving average. I'm going to just use the 200 SMA. You can see when we pulled away here, there was a lot of consolidation. Then you got that power bar reset here on the 18 and rally higher, correct? So when we consolidated here, we kept chopping back and forth on the 18, and eventually that power bar here took us out. Coming back to retest it, we fell further down. Then we reversed on a power bar up here and went back up. Usually it comes back to the 116 and 200. Now we are starting to get away from the 200 and the 116. You can see the 18 how it is. You got the 50 in the middle right here consolidating. So I am paying attention to the 50 in case it falls through, because if I edit the property, I'm going to show you how to do this. We can do this on a simple moving average. You can put simple moving average and add it in here. Go down to the bottom. On that simple moving average, what I'm going to do is create a 50 SMA. You can ask us a lot more information about this in order to help you a little bit more. I'm going to make it 2 so everyone can see it. We're going to apply it, close the area. You can see where the 50, as long as the 50 and 18 are crossing, this is a death cross. When the 18 and 50 crosses to the upside, this is a bullish cross. And catching the 18 usually on a power bar up or power bar down is usually reversal. Let's say we were consolidating in this area. You can see it here. This is a power candle. So it came back down, retested it. You broke it here on a power candle. You rallied up, came back down, retested it. And this is a power bar. So you get in on that candle, rally to the upside. Once the 18 and 50 crosses again, then it goes to the other side. And you can see it happening here as well. When the 18, your power bar breaks, go down, comes back to it, breaks, go long, and vice versa here. This is on a daily chart. You can do this actually on a minute chart, 5-minute chart, 15-minute chart to give you supply and demand and momentum. You can see that triple top. The big bar candle here engulfing, there's a power and dumped further. There was continuation on consolidation coming back to the 18, couldn't clear it, and you fell down and rallied, continued lower. Then you came back to the 18, fell back in. You came, retested the 18 here, trying to break out, couldn't make it, fell back down. Now the 18 is acting as resistance until I get a power bar back up. Then I'll look towards the 50, then the 200 SMA. But if I keep continuing getting slammed by the 18 SMA or the 20 and I can't find support, then I look for the bottom, vice versa. You can trade these in simple formats. They don't hurt, but usually are 90% accurate on those entries. So let's go last. Let's take a look at the significant Magnificent 7. And what I did on the Magnificent 7, I had included Netflix in there. So what I'm going to do here in the style, in the candles, I'm going to show you the monkey bars and the style load. Let's go to the RSI Fibonacci. That will give you all the sectors on the oh, that's not it. Style, it's in the other one then. In the YouTube one. You can see here I have all the sectors of the S&P, the NASDAQ 100. I've got Apple, Amazon, Alphabet, Google, Google, Meta, Microsoft, Netflix, nvda. Netflix is starting to set up. nvda broke out a couple of days ago. Tesla's coming back in. I'm looking at the 455 area. The S&P sectors are the energy, discretionary, financial, utilities, material, consumer product, info technology, real estate, industrial, healthcare, telecommunication. And I have here Bitcoin, Ethereum, gold, which broke out for the year, annual high, as well as silver. Remember, the supply chains coming in from Asia may keep dragging gold and silver higher, but you have to look for resets in order to continue. And the fear and greed, the VIX is on the floor, which I showed you in the slide. So we got to pay attention to that area on the combination of those instruments. You can see that the high that was created, that was the low, the rally up, retest, make a higher high. But here on Friday, it was kind of a weak sectors because not all of them were moving in a positive way, like such as Apple, Amazon, Google, Facebook, Meta, Netflix was green, as well as NVDA. And this is the reason why you had this candle, engulfing candle inside this one, but it wasn't a power bar like this one on the reverse and back up. So we trade what we see, not what we think. And I hope this video was very helpful. If you have any questions and you'd like to check us out, you can check us out on the YouTube channel. Subscribe for free on weekly basis. But if you want to get in contact with us, reach out to us at Solstice ATR or call us at 949-414-8484. Wishing everybody an enjoyable holiday and happy 2026 for everyone. Take care. Over.